Hi guys, welcome to Savvy Money Show. Me, your host Sean. Well, I've had a few people asking questions about Evergrande and China, so I'm going to give a bullish and bearish take on it. Basically, a lot of Chinese people are more financially illiterate than in Europe and US. So 90% of Chinese people buy real estate stocks because as far as they're concerned, it always goes up. When you buy a property in China, it's just a shell of a property. That's why you have worktop shops and toilet shops near developments, because you need to fit everything out. And a lot of Chinese people will buy a second property as an investment. And what's happened is COVID hit and sales were hit. So Evergrande and other real estate companies had to cut prices at first 10%, then 20%, then 30%, all the way to 50%. And that hit their debt repayment, as we know. Now, Chinese President Xi has promised after the last debt repayment that anyone who paid for their homes would get them, and Evergrande's debt was not paid. It now becomes due in October, otherwise they will default. Now, we don't know the terms of this so-called default, but they haven't defaulted yet. They have 30 days before they go into default. Now, if they have been given land as capital in case of default, or the Chinese government takes land if they default, then my guess is that that will be distributed amongst other property builders in the event of a total collapse, on condition original terms are kept. People are watching Evergrande, but like with subprime housing crash, the other Chinese property developers are at risk. They used to buy land, put it up for sale with a time period of it'll take 2 years to build, and it will be sold in 5 minutes. Now, remember Ray Dalio during the crash said China was the next growth story. BlackRock, Goldman Sachs, and a lot of other ETFs and funds have invested in China. So those that have emerging markets or are heavy in China will be taking a hit if it does default. So be careful. I've been asked what I'm doing. I am consolidating cash on my profitable companies that are profitable above a certain percentage. I don't let myself go below 25% cash, but then I tend to hold 20% cash anyway. I will be going high cash. I will reevaluate this in October in case this has ripples and be a correction making event. But as well as this, you have other elements. Posted in my Discord how the margin amount, which is almost at $1 trillion, was a week. The report was a week late because they wanted to recheck their numbers. The S&P, QQQ, and Dow has been rising near enough non-stop, and is at or near all-time highs. Fed has announced tapering, and there's nothing to stop them doing it earlier than expected. And I mentioned going into financial stocks for tapering, but you might want one with limited exposure to China, or wait until after October when you know what's happening with the Evergrande situation. Also posted how Barclays was being sued again for a rates rigging scandal again, which might bring to light more banks that are involved. Now, let's look at another side. Now, we keep hearing $300 billion, which is their debt. But the immediate issue is the 47.3 million interest rate due on the 29th of September.
Hi guys, just in case you're unaware, you have until the 30th of September to sign up and be in with a chance for £2,000 worth free shares. You will be guaranteed your free share worth between £10 and £250, but then between £3 and £200. They changed it recently, but you will also go into a free draw where you will get added share worth £250 to £2,000. Why wouldn't you? As well as that, tickets to Rita's virtual Paris show. No. Thing is, you deposit £3, you get free share. It's a no risk situation. Me, I'll go. If it was me, I'd just stick a tenner in and see what happens. So only a tenner. Think of it as a raffle ticket, but you're gonna get a free share with it. I'll see you in the next.
If they can't make that, which it looks like they're not going to be able to, they have 30 days before they default. But remember, over time stocks go up, and we don't know how China will manage those assets. They've already made provisions of $1 trillion for the banks to protect them, and they have already stated that everyone will get their property. So we don't know if they're going to step in and take control of Evergrande. Now, the $1 trillion they're making for the bank, it would be a lot easier for them to just take control of Evergrande and wipe out the debt. But it could set a precedent. So, do I think we could see a Chinese housing crash which could be heard around the world? If the Chinese government doesn't step in, yes, but there are signs already stepping in, as I said. The other question I got was, if I'm holding cash, is it time to sell? So I said I usually hold 10 to 20% cash anyway, and holding a bit more isn't a stretch for me. You could hold off until October before investing any more and reevaluate, but just because I'm doing that doesn't mean I'm going to stop investing, because you could lose out on any other play, such as the infrastructure bill, or something that may or may not happen. I was also asked if I'm buying Baba as it hit my price target, which it did, but the fundamentals have changed, as I spoke about before, with the ant pay going to government and the donation. Now we'll speak about that. Ant pay was the main reason, but the donation was a third of their cash, but it's not in one payment. It's going to be over 5 years, so it's more like 15 million a year. Now it depends on the terms of the donation and whether or not it's a license for them to carry on the way they are. If that's the case, it's not too bad. Now, I'm going to leave Bubba at the moment unless it hits 100 to 120. If it hits 100 before October, then it will be worth it, the risk, in my opinion. If it's 100 to 120 after October, and Evergrande hasn't defaulted, then it will be worth the risk. I think it has a price target of 200 at the moment, with everything going on, but You have to come up with your own price target. There's also a report that came out today how Chinese cities are seizing evergrande pre-sales to block potential misuse of funds. Now, we don't know what's happening with this. We don't know what's going on, but at the same time, only Evergrande would know. Now, am I picking up anything? Yes, I averaged down on Corsair. The analysts raised forecasts from 3% growth to 20%, and I think they're low balling it. When it's under 29, I'm buying, as I said before. HIMS, I'm adding to that. It's debt-free, founder-led, and it's huge growth. And there's nothing but good news coming out of it. You're getting at a price it was 12 months ago. With all the growth, they tend to sandbag earnings as well. Planet 13. Now, I sold some of this at over $7, and I kept the profit split between cash and free shares. And now all the profit I used, I'm buying back in. I never thought I would see it in the $4 range again. I think we will see some news come out about the MJ stocks. Tattooed Chef. No, short interest is just a bonus. I believe long term in this country. This company, and the majority of seasoned food companies have a maximum of 50 SKUs in a supermarket like Target. Now, Tattooed Chef has gone from 2 to an agreement of 25 with Target, and any style you want them to be in, like Kroger's, they're in. I've also bought into LiDAR, initially for the short interest, because I believe a short squeeze is going to go on there, like with TMC. I believe a short squeeze is going to be on there. Just a tiny hold, but as you know, with my Discord, I've put a lot of due diligence in, and I'm happy holding LiDAR or AI for long term. And the same with BFGV. Now, which is a sports store which is heavily shorted, gives a good dividend, and is undervalued in my opinion. I'd like to know what you guys are doing. I'll see you in the next video.
Hi guys, welcome to Savvy Money Show. Me, your host Sean. We're going to speak about a couple of short stocks that can run, but we're going to start with Freetrade and a new ISA offer. Now, I haven't used Freetrade as an ISA platform before. I've used Trading 212, but their free share offer, I think, is pretty good. I like Freetrade and the whole mantra. They behave, although they're not as cheap as Trading 212, they behave a lot better, and I'd rather socially I'd rather go with them. The thing that was stopping me was the cost, £3 a month, when Trading 212 was nothing. But with this, let's say for instance you're putting 15 to 20,000, transferring out 15 to 20,000, which you have an allowance of with an ISA, you'll get a free share worth £200. Now, if you sell that share straight away and get the £200, of course, if it's something like Apple, that you may want to hold it and get the appreciation. But let's say, for argument's sake, you sell it, get the £200. That will equate to 66.6 months of your ISA fee. Now, that doesn't sound too bad for me. Remember, it sounds even better for me, being that I'm without an ISA now, that Trading 212 has closed my account for complaining to them about the way they've acted. So I will be taking this up.